Okay, team, Prince here again. This is a new video. It's an introduction to crude oil trading. How I trade the crude oil. What do I think about the crude oil? What are my beliefs of the trading system? What are my beliefs about the crude oil market as a commodity? You know, and what do I really watch when I'm sitting on the computer? What are my strategies? All right, let's talk some basic things. Okay, first of all, of course, to trade, you need a broker and you need a platform to trade. We are using MetaTrader 4 platform in the Skype oil room. That's number one. And number two is, of course, you need to understand the chart setup. We are using 8 range chart and 34 range chart. If you don't have a range bar plugin or range bar indicator, we can use you can use a time bar charts, an hourly chart, 15-hour chart. The indicators that we're using are just 13 EMA, 13 EMA, 34 EMA, 200 EMA, and awesome oscillator. I'm trading the crosses on the EMAs. Bearish cross, I go short. Bullish cross, I buy. Okay, and I'm risking less than half percent or less than 0.5 or 0.25% per position. The way I trade is I usually average out of position. One of the famous trader, Paul Tudor Jones, says losers average losers. I think it's bullshit. He doesn't know how to average, or probably there's one disadvantage that the American traders, they have an option of trading first in, first out order. I don't want to explain what does that mean, but basically what it means is they have to close a position to open a new position or to open a position in opposite direction. Let's say as US citizens, as non-US citizens, we can buy a position and we can randomly sell a position on same instrument. But in USA, you can't do that, or with American brokers, you can't do that. So that's a very nice privilege that we have. Okay, so let's talk a little bit about the trade management. Let's speak about first of all, you need to understand crude oil is traded at the Chicago Mercantile Exchange. All right, but the crude oil that we are trading with AvaFX broker is a non-expiring crude oil futures, continuous futures contract. It doesn't expire every month, so if you have a bad position, the broker is not going to liquidate it. All right, the broker won't liquidate it, and the position will be rolled over for a small negligible fee to the next contract. Okay, do you understand what I mean? So for details on that, you have to contact your broker. Okay, the commodities, I believe they won't go zero in value. Even if you buy a sand for constructing a building, it has a value. Maybe it's small or sugar or salt in your kitchen. It's a commodity. It has value. You have never gotten it for free. Okay, there's nothing for free. You're always marketing. So I believe that the crude oil as a commodity, it won't go bankrupt. It's independent. Okay, it's a natural resource extracted straight out of earth through big machinery, which of course involves costs. Okay, even if we have deflation, it won't get get hit like shit this time. Okay, because already things have become expensive, and because it's not going to be zero, I love buying the crude oil in small sizes. Okay, even if the market's going down, I'm buying it. If I have a $5,000 account, what I'm doing actually is I'm buying every 50 ticks drop with 0.01 size. Okay, that's basic trade management, as up to maybe $70 a barrel or $80 a barrel. Okay, and at the same time, if I see bullish EMA crosses, or if we are above 200 EMA, if the market prices close above 200 EMA, just like here, okay, and we have a bullish cross, I would love to go long. For example, let's draw it. For example, you see this is the 200 EMA, market went up. Oops, wrong tool, wrong tool. Sorry, here. Market goes up above the 200 EMA. This blue line is a 200 EMA, okay? It pulls back, okay? Now the price is hovering here above the 200 EMA, okay? But anyway, the market chops, and we see here a bullish EMA cross. You see? Bullish EM across. I would go break, enter long above this candle right here. Sorry for a messy chart, okay? And I'm gonna jump in the trade. We are above the awesome oscillator is curled bullish. We have a bullish EMA cross. Okay, it was a triple cross, and we can ride the trend long all the way up till we have a bearish trend forming. Simple strategy. That's how I trade. So let's say if I'm already long at every 50 ticks drop, but for this specific strategy, which I call shut up and keep trading system, skits. The reason why I call it, because we are trading very small size. Even if we get stuck, we can really average in the position, scale in or scale out, and we can easily get out of them. I hope I'm being clear, but in future I'll speak more clearly about the strategy. So we've spoken about what crude oil is and from where it's traded. It's a commodity product of Chicago Mercantile Exchange or Mercantile Exchange, depending on where you're from, how you pronounce it. That's number one. Number two, my belief is that the commodities do not go zero in value. So I trade very small sizes and I buy the dips. Every 50 ticks, 100 ticks drop, I'm gonna keep buying. I'm gonna keep buying as a long-term investors, and my broker's not gonna roll it over. Third, one of the strategies that we're using in the room are EMA crosses. Okay, the EMA crosses, bullish EMA cross, the indicators in direction, we enter a long trade. Simple. That's what we're doing. All right, what else do I need to cover for you? Um, yeah, all right, and basically let's do some analysis and talk about the risk management. All right, let me switch to the mouse. Oops, oops. Sorry, I was making a video. Let's do some technical analysis. Okay. Now, this is a daily chart. Okay. Now, when you take a position, you should be committed to it. That what's if shit happens, what's gonna happen? If we go in the past, in 2008, when the crisis happened, the oil went $146 a barrel and dropped at 31, which is like 15, around 5 times in value. You know, this is what happens. This is what happened in the past. But you see, it did not go back to 20 or 30 because of, according to the inflation of that time. So this time, even if we have a fall, we should expect it to bounce. It shouldn't test this area first of all because of inflation and commodities. The concept is that commodities should always rise in value. Even if it crashes, you can draw your fib levels from here to here, and you can expect, that this is the place, this is the area, 51.1 or 61 point area. This is where a market could fall if shit happens. Okay, that's how I'm making my trading decisions. Do you get an idea? Yeah, I hope you're getting an idea. All right. Also, I do understand if the move happens around 10 to 20%, it should. Okay, market moves in symmetry. You have to know another thing. The market does not go straight up, it doesn't go straight down. There's always going to be a pullback for you to ride on. If you missed a trade, don't worry, the market is there. It's going to give you another entry to enter. Okay? So you have to understand one more thing, that if you see now, according to current market situation or according to current economy, our key support for now is in this area around 91 and 84. Worst case scenario for now is $75 a barrel. That's what could happen. Okay, we are trading below the 200 EMA. Okay, and the market can still be bearish. We have to be careful. But if you see in the past, this is kind of an inflection point. Inflection point. Let's say, okay, now if you wanna be trade like an investor, and you think of, okay, I have a $5,000 account, but I have little balls. I'm really a pussy and I can't take a risk, but I only want to take 10% risk on my equity or 5% on one position. What you can do is you can identify the next target levels. The next target is $100 a barrel and $112 a barrel. What you can do is you can do some mathematical calculation, open one position, that if the price goes at 112 or 110, your gain in equity should be 3%, 4%, or 5%. And it's really achievable, because the certificate of deposits are bullshit. You can really have this kind of target within the 1 or 2, 3 months, trust me, you can do that, Or What you can even say, okay, the risk that I want to take if the market, if you enter here, the risk you want to take is if the market comes to this price again, you should be losing such and such amount of money or such and such amount of money. You have to keep the risk management, money management, trading plan in mind. If you have no trade plan, trust me, guys, you will get your asses whooped in this market, really bad, really bad, you know. So trust me. See, trading is not for everybody, okay? But traders can be made, all right? If you follow the rules, discipline, you've got Vladimir's course. I'm sure you're members of Vladimir Rybakov, his Divergence University, and Vladimir Forex Signals. I always recommend the other members, people who are just, hey, this is not working out, that's not working out. I always tell them, look, repeat the course, repeat that video of investor style trading, ask questions, commit to a system, don't be greedy, don't rush, it takes time and patience. When you go to a medical school, you become um, this is a quote from one of my educators. I can't remember which one, but when you go to a medical school to become a doctor, okay, it's 4 years of theory, 2 or 3 years of internship, then you become a doctor. Don't fucking expect that just did a course and you'll be a fucking millionaire, or a successful $1 million trader, or a hedge fund manager. No, it takes time, patience. It takes great balls of fire, you know. And trust me, if you don't have a trading plan, you don't follow. Oh, by the way, the most important thing in this business is also you have to respect your educators and mentors. It's a spiritual belief, natural belief. If making a lot of money isn't really a sign of success, maybe you can buy things, but it might not bring satisfaction. You have to love the people, share your money, but you really, since this is an educational webinar, you really have to respect your educators and teachers and try not to criticize them, because they really put a lot of energy and time to teach you these kind of strategies and techniques. We are all becoming traders to become, we became traders to not be a part of 9 to 5 people. You know what I mean? 9 to 5, those guys who wake up in the morning, yeah, who wake up and they're waiting for their wife to give them muffins, egg McMuffin sandwich with some hot coffee. If they're lucky. You know what I mean? I've been through that. I just had a career only for 10 months in my life, but I've seen people around me how their lives are. I respect all professions are supposed to be respectful, no problem. But if you really want freedom, 9 to 5 doesn't mean freedom, because basically these kind of companies, they pay you enough to just pay your bills and have sex once a week, twice a week, and they pay you enough to uh, buy food for your family from Burger King, once a month grocery shopping, 2 pack of condoms, one pack of cigarettes, it doesn't matter, but here you can really make money if you follow the rules, follow the instructions, respect the teacher, ask questions, respect your colleagues, share information, stick to one plan, one method, probably, for sure, it should work out, I believe so. It's working out for me, working out for other members, it should work out for you. Why not? you know so, yep. Fuck, I forgot what I was saying. Anyway, so damn, what was I saying? Anyway, I believe we were talking about trade management. I was talking about how you can really, uh, as an investor, how you can commit and take a position without looking at market, without looking at indicators what they're doing. There are many ways to trade. Okay, one of the trades could be, one of the simple strategies could really be like, you take this low, draw your fib levels. Okay, buy all these fib levels in a smart way. What you could do is like, you know buy at this fib level as a breakout, but you can say, okay, if this trade goes against me this much, the floating loss should be this much. You know what I mean? I am sure this video can help you understand trade management very well. If you don't understand it, seriously, I think you need a psychiatrist, a psychologist, or you need some ass kicking. You know what I'm saying? I'll try to explain it again. Okay, trade management. When you enter, you should calculate, if this trade goes against me, how much itchy should I feel in my butt? You know? Or when should I start crapping in my pants, or when should I feel sweaty? All right. I hope I'm making sense. This is why I don't panic in the room. I know what I'm doing. I have a trading plan. I have a strategy. I'm here to help as well. But you need to know. You can't fucking assume that you have a $5,000 account and the market goes here. You need a $1 million profit. Fuck no, that's not gonna happen. You have to be realistic as well. Of course, it's good to fantasize. You deserve to fantasize, and but you have to learn how to change your fantasy into theory. You have to write your goals or fantasy. Yeah, they should be convertible into theory. Yes, you can make it 5,000 to $1 million. It might take time. Take good risk. Follow your rules. Buy low, sell very high. Compound it. This way, it's easy to make your $1 million or whatever. But you really have to be smart. Because you have to be educated. That's why the course is there. That's why you have educators. That's why you have fellow members in the room to ask questions. But trust me, guys, this game is all about capital, risk, and money management. That's it. That's it. Trust me. All right. So we've covered previously in total. We've spoken about the strategy, money management, my belief of commodity, why I like buying, why I don't like short selling. Okay, and we do like I've spoken about the fib strategy, buying 50 half round numbers, using less than 0.5% loss, buying the fib levels only and staying committed to them. That's one thing. What else do we need to cover? Yeah, even there's another video that discusses about the basic rules of the oil room. Yeah, I think this is so far. That's it. That's it. Um, let me think. Let me think. I think that's it for now. But yeah, just one thing in mind. Just remember that bigger drops is equal to bigger pops. Bigger pop is equal to bigger drop. But it's usually bigger drop is equal to bigger pop. You see, we have a consistent drop from here, okay, at a 2,000 tick drop. But you see, we had a pop as well. You see that? You see? And from here, market started to go again, 10% in value drop. So don't be scared. Just take educated trading decisions. Don't try to be aggressive. Be patient. Learn the money management. Once you master the money management, that's it. This bloody market is it's your baby. You can do whatever you want. You can do, and you can apply any trading style to it. Aggressive, whatever. But when you're being aggressive with an educated trading decision, the results are yours. The results are in your hand. It will go how you want. I hope this video really helps you. If you have any questions, if you want me to do any improvements, make any video for you, feel free to post your questions. Comment on the YouTube video, give me your feedback. I'm here, I'm available for your questions. So this is Prince, and I can't really concentrate on the video because I've even got cold and flu. You can maybe those who are familiar with me, they know my voice very well. So, yep, that's it. I'm out. I hope this video helps and have a beautiful, beautiful trading week.